your side hustle is starting to take off. Maybe you're selling products online, freelancing in a creative field, or running a consulting gig in your spare time on top of your traditional 9-to-5 job. Many of my videos are directed at established business owners and entrepreneurs, but maybe you found your way here because you're just starting to dip your toes into the self-employment water. But at what point does your money-making hobby become something that requires a legal structure, and how do you choose the right one? In this video, I'll walk you through when and why you should operate your side hustle through a separate legal entity, address some basic pros and cons of different business structures, and explain a few ways to help protect yourself without overcomplicating things. So, do you need to legally structure your side hustle? Let me preface things here by stating that not every hobby or side gig needs a business structure right away. But if you're consistently making money, you need to start thinking about legal protections and taxes. So here are a few signs that it's time to form a legal business entity. You're making at least $600 per year, which triggers IRS reporting requirements. You're working with or selling to clients or customers regularly. You're entering into written contracts or other agreements. You have business expenses and you want to write them off on your taxes. You want to separate your personal and business finances, or you're at the risk of being sued. Think about this one broadly. Are you selling any physical products, especially to children or vulnerable populations? Is your business in a regulated industry? Are you giving advice? Are you handling client data? Do you have any physical contact with customers, like massage therapists or fitness trainers? Think this last one through thoroughly. If your side hustle is more than just beer money or a casual hobby that occasionally brings in a little bit of cash, it's time to start thinking about structuring it like a real business. So let's understand what your legal options are. First, a sole proprietorship is the default structure when you start making money. If you don't form an LLC or a corporation, you're automatically considered a sole proprietor. This makes it low cost and easy to start. At most, you might need a business license from your local town or county officials to operate, but typically no formal state or federal level registration is required. It also simplifies tax filings. Your sole proprietorship's tax ID number is the same as your Social Security number, and your income is reported on your personal tax return. For these reasons, I've noticed that a lot of accountants seem to like them and recommend them to their clients. I'm afraid that I have to vociferously object to this approach. What your CPA might fail to consider is that sole proprietorships leave you exposed to unlimited personal liability. This means that if someone sues your business, your personal assets, like your home or your savings accounts, might be at risk. For this reason alone, I think it's imperative that almost all solopreneurs choose a different structure. But if you aren't convinced, note that sole proprietorships can also make it more difficult to establish credibility with clients and customers who won't see you as a real business. And notwithstanding what your CPA says, from a practical perspective, many clients find it harder to keep their personal and business finances separate this way. Sole proprietorships might be okay for a very, very low-risk business. Things like selling handmade crafts at a local market. Some sporadic freelancers are comfortable with the sole proprietorship as well, which I can live with only if you are absolutely certain that you and your work will never be challenged for, say, an accidental copyright infringement. But for anything beyond the most casual side hustles for which you won't ever want to expand, for anyone who is working with real clients or who is making a significant amount of money, it's time to level up to an LLC. So let's talk about limited liability companies, my preferred entity structure for most side hustles. An LLC is great because it creates a legal separation between you and your business. As long as you aren't using it to perpetrate fraud or evade taxes, operating your business through an LLC will shield your personal assets from business debts or lawsuits, although, of course, this protection can be contracted away. For example, you might expect that if you lease an office space or showroom, the landlord will check your personal credit as well and require you to personally guarantee the lease payments rather than relying on the word of an unproven company and repeatedly getting scammed. But the default rule is that your family home, your personal savings accounts, and your other assets are completely separate from the assets of the LLC for liability purposes. I also love LLCs because of their flexibility. If you're a single member LLC, which is probably going to be the case for most side hustles, you can elect to be taxed as a disregarded entity, or you can make an S-Corp election, which I'll talk about more in just a moment. And if you want to bring on business partners or investors in the future, the LLC allows for an easy transition to multi-member status, at which point you can be taxed as either a partnership or an S-Corp, again, depending on your priorities and tax needs. Beyond that, LLCs can help to establish your credibility with clients. Having an LLC simply seems more professional when you're signing contracts and establishing business relationships. Whether it's warranted or not, your vendors, customers, and clients will tend to take you more seriously as a real business, even in service professions. It also facilitates your ability to get business bank accounts, sign commercial leases, obtain corporate credit cards, and otherwise operate in a way that makes your life easier and keeps your personal and business finances separate. State registrations are easy. If you go back to some of my earliest videos, this is one of those areas where I really encourage clients on a tight budget to try to figure it out for themselves rather than pay a lawyer to do it. We'll do it if you ask, but it's usually a ripoff and a bad use of your legal dollars. State registration fees vary by state, but typically range from about $50 to a couple $100 for the initial registration, plus a smaller fee for annual renewals. I hope that I've convinced you that these relatively inexpensive fees and slightly more paperwork are well worth it. If you're a side hustler making consistent money that adds up to a couple $1,000s a year or more, or if you're working directly with clients in riskier industries like coaching, consulting, or the health and fitness professions, or if you sell any physical products like nutrition supplements, electronics, toys, or other things that could lead to product liability claims, forming an LLC is often the smartest move. It's a low-cost way to protect yourself while keeping things simple. Finally, let's talk about S-corporations. An S-corp isn't actually a specific type of company. It's a tax election that lets LLC and corporations, that is INCs, reduce self-employment taxes. I do want to clarify a common misconception even among professionals like CPAs. You do not need to form your entity as a corporation or an Inc. in order to make S-corporation tax election treatment. LLCs have the flexibility to elect S-corp status too, and they are simpler from an administrative and governance perspective, so you really get the best of both worlds. Also, you don't need to give your spouse or your sibling or a key employee a 1% interest in the company to be eligible for S-corp elections. Single-member LLCs can elect this tax status too. So why does it matter? Well, the biggest reason is the potential tax savings if you are a higher earner. Recommendations vary as to what income level warrants making an S election. I've heard as low as $50,000, and I used to work with a lawyer, who I later learned was grossly incompetent, who advised against S-corps until the business was making $300,000 a year or more. Now, that's asinine. My perspective is that it's good to have this discussion with your advisors once your business is bringing in somewhere between, say, $80,000 to $120,000 of steady income annually, although there's really no harm in having that conversation sooner. Making an S election will involve more paperwork and accounting costs, And if you're a multi-member LLC, you do lose some flexibility, for example, to provide differential distributions among co-owners. You must pay yourself a reasonable salary, even if your business profits fluctuate from month to month over the course of the year, which means you need to do some advanced planning. But the upside is that any additional profits you take after that reasonable salary are treated as tax-favored owner-level distributions and aren't subject to self-employment taxes. If you want your side hustle to stay a side hustle that only brings in a couple extra $1,000 a year, an S-Corp is more than you need. But if you're making a steady and significant net profit already, and you're planning to scale or grow into a full-time operation, making an S election can ultimately save you thousands of dollars in taxes, more than enough to justify the extra accounting cost and some minor administrative burdens. Okay, so this was probably a lot to take in, especially if this is your first business. That's okay and to be expected. I'm going to walk through some key legal considerations for your side hustle now, but I'll also post a checklist of some of these important first steps, which you can screenshot for your future reference and use to discuss with your personal attorney or accountant. First, register your business. If you're forming an LLC, form and register the entity with your state's Secretary of State, and check local and county laws to confirm what business licenses may be required. Next, get an EIN, or Employer Identification Number. In the United States, this is free and can be done through the IRS website. Some of the questions can be a little confusing, but click on the little information icons. In most cases, you can fill out this form without paying a lawyer's secretary to do it for you. This tax ID number is like your business's social security number, and it's needed to open a business bank account or get a business credit card. It also helps keep personal and business finances separate and establishes your business as a separate legal entity from you as an individual. Next, open a business bank account. The obvious benefits of a business bank account are that it keeps your finances organized, it helps track income and expenses for tax deductions, but this is really important for liability protection purposes as well. As you commingling your business and personal funds too much, you risk piercing the corporate veil in the event of a lawsuit against your business, which means that your personal assets could ultimately be exposed despite all your efforts. Next, know your tax obligations. So if you earn over $600 from a single given client or customer, they may ask for your W-9 or send you the 1099 NEC form. If you get one of these forms, spot check it to ensure that the information is accurate and aligned with your own records. If the numbers are misaligned or the nature of your business or the manner in which you process payments is such that you shouldn't be getting this form at all, talk with your CPA about how to handle it. Set aside at least 20 to 30% of what you generate for taxes if you're self-employed. I recommend having a separate bank account that is your tax pot, where you deposit that 20 to 30% or more of income that you don't even touch until it's time to pay the tax man. I cannot tell you how many times I've seen people ignore this advice, only to be absolutely panicked and distraught in tax season when they are scrambling to cover their tax bill. Quarterly estimated tax payments might also be required to avoid penalties. Whether they're necessary, when you need to start, and how much they should be each quarter are all things you're going to want to discuss directly with your CPA. But the process itself is relatively straightforward, so don't let your accountant intimidate you into overcomplicating things or meddling too much for an additional fee, unless you would truly rather pay to delegate it out. Finally, don't forget to get business insurance for your side hustle when that's appropriate. Now, I've already posted a couple of comprehensive videos on business insurance, so I'd encourage you to go back and watch those to better understand your potential options and needs based on your industry, clientele, or other risk factors. General liability insurance is a good choice for almost everyone, but especially if you provide services to clients and you aren't covered by a professional liability policy. If you're selling physical products, product liability insurance might be a good choice as well. Remember, the LLC structure protects your personal assets from liabilities arising out of the side hustle, but it won't protect your side hustle business's assets themselves. Insurance can make sure that you're covered, especially as your side hustle grows. Which leads to the final topic for today. When should you upgrade from side hustle to full business? The most obvious answer to this question is when you're making consistent revenue. I can't put a specific number on this for you since it depends on the full-time job you'd be leaving behind, your savings, your other sources of income like a spouse or a parent, and your personal and family expenses. I hear $30,000 tossed around as the point at which side hustlers start to think, hey, maybe I can make this into something real. But that depends on whether you need full-time focus to scale. If you're hitting $30,000 a year based on 10 hours a week of work, but you reasonably believe that revenue would grow proportionately or even exponentially if you could dedicate more time, well, hey, if you quadruple those 10 hours to 40 and you would quadruple that 30K income to 120,000 or more, a lot of folks would consider that to be quite a nice living. But that's not something that you should blindly count on. If the demand for your goods or services isn't there, your willingness and ability to work full-time won't matter if those 40 hours a week only boost 30K to 35K. If you're planning on long-term business growth and the potential is there, even if there is some sort of cap on your individual ability to generate additional revenue, it probably makes sense for you to consider moving from a side hustle to a full-time business. Which leads to the final consideration, whether you want to hire employees or contractors. For many services and even for many types of goods, after a certain point, additional growth requires additional team members. Even if you're only going to dedicate part-time hours to the venture, if you're engaging employees or even independent contractors to work for this venture, it's time to start treating it more like a legitimate business. Now, with all that said, let's not forget that not every side hustle needs to become a full-time business. If you enjoy your day job and just want some extra income, keep it structured as a part-time LLC and enjoy the best of both worlds. Being mindful about structuring your side hustle isn't just about optimizing your tax burden. It's about protecting yourself, staying legally compliant, and setting yourself up for success. Whether you go with a sole proprietorship, LLC, or S-Corp depends on the factors we discussed today, and potentially others, so be sure to discuss with a trusted legal or financial advisor before locking yourself in.